Every year, the government takes a chunk of your money. Most people accept it and move on with no idea how it works. Why do you sometimes get money back in April? Why do you sometimes owe? What does it mean to be in a tax bracket? Nobody explains this well. 5 minutes fixes that. Taxes are the biggest expense most people will ever have. More than rent, more than a car, more than food. Over a lifetime, the average American pays between a quarter and a third of everything they earn to federal and state governments. Skip understanding how taxes work, and you can't make smart decisions about your paycheck, your side income, or your investments. What is a tax? A tax is a percentage of your income the government requires you to pay. That money funds roads, schools, the military, Social Security, and Medicare. You don't opt out, and you don't choose where it goes. Federal income tax and the bracket system. The federal government taxes your income on a progressive scale. Earn more. Pay a higher rate on the dollars above each threshold. Those thresholds are tax brackets. In 2026, the first roughly $14,000 you earn is taxed at 10%. The next chunk, up to about $66,000, is taxed at 12%. Higher earners pay higher rates on the income above those levels. Most people get this wrong. Being in the 22% bracket does not mean you pay 22% on everything. You only pay that rate on the dollars that fall in that bracket. The first chunk is still taxed at 10, the next at 12, up the scale. Withholding. Your employer doesn't wait until April. They pull a portion from every paycheck and send it to the IRS directly. That's withholding. The amount depends on the W-4 you filled out when you started. That form tells your employer how much to pull. Fill it out accurately, and the withholding should match what you owe. Why you get a refund or owe money? In April, you file a tax return. You calculate what you owed for the whole year and compare it to what was withheld. If too much was withheld, the IRS sends you the difference back. That's your refund. If not enough was withheld, you owe the difference. That's a tax bill. A refund is money you overpaid during the year. The government held it, interest-free, and is handing it back. A big refund every year means your withholding is off. State income tax. Most states charge their own income tax on top of federal. Rates vary. Florida and Texas, for example, have none. The mechanics are the same. Withheld from your paycheck, reconciled in April when you file. Self-employment and side income. W-2 employees have withholding handled for them. Freelancers, gig workers, and side business owners don't. You set aside your own taxes and make quarterly estimated payments to the IRS. Miss those, and you owe a penalty on top of the tax in April. When and how to adjust your withholding. A lot of people treat a tax refund like a bonus. They spend it on something big, feel great about it, and think the system rewarded them. That money was theirs the whole time. They let the government hold it without collecting interest. If your refund runs over $1,000 every year, adjust your W-4. Keep that money in your paycheck each month. Park it in a high-yield savings account. You earn interest on it instead of the government holding it for free. Let's recap what we've learned. 1. Taxes are a percentage of your income paid to federal and state governments. 2. The bracket system is progressive. You only pay your top rate on the dollars in that bracket, not on everything. 3. Your employer withholds taxes from every paycheck based on your W-4. 4. Your April tax return is a reconciliation. Refund means you overpaid. A bill means you underpaid. 5. Side income means you handle your own taxes. Set money aside every month. Please like and subscribe if this helped. Next video, how to file your taxes for the first time, what forms you need, and how not to mess it up. See you then.